Correct. Credit unions operate under a very strict set of legislative and regulatory guidelines, and they can only do what they're permitted to do by law. Fortunately, in the past decade or so, both the Michigan State Legislature and to some extent the federal regulator for credit unions have both allowed for more permissive fields of membership that allow more people to have access to a credit union.
Okay. Now, does a credit union have kind of the same structure as a banking institution? I mean, do they have a board of directors, shareholding meetings, annual meetings, anything like that?
You bring up a very important difference in the structure that I didn't mention. Credit unions have a board of directors that hires a CEO, and then the rest of the staff are hired just like you would see in any business. But the difference is the board of directors are all unpaid volunteers. On the bank side, again, a fundamental difference is that bank directors are compensated, and quite often they own stock in the institution. So they have a direct financial benefit in the profitability of the bank. So the officers and directors are benefiting from the profitability of the bank. In the case of the credit union, the only incentive is service. These are unpaid volunteers serving on the boards of directors. And even the CEO and the other staff don't have access to any kind of stock or stock options. They are compensated, but they are just providing service to the members.
How do you become a board member or an unpaid volunteer?
They're elected by the membership. So every credit union has a specific field of membership. If we take an educator credit union or even a community credit union, every year there are elections held, and from the ranks of the members, the directors are elected.
Okay, and that's kind of a unique difference. I guess I didn't realize, because I have a lot of community banking institutions in my district, that they really have stock owners that they're on that board for a variety of different reasons than a credit union board. Is that correct?
Right, and let me stress, it's really important for our society and for our economy that we have a strong, vibrant banking system. It's important that we have strong, profitable banks and insurance companies and finance companies. But it's also important that we have a strong not-for-profit credit union alternative. There is room for all the players. Just about anybody we might talk to within your viewing audience, I'm sure they have multiple relationships. They might be a credit union member with an account at a bank, with a policy with an insurance company. It's important that we have this really diverse financial services industry, and there's room for everybody to play.
And credit unions are high tech, I take it. I mean, you can bank online and you can transfer money between a credit union and a banking institution.
Sure.
All that kind of stuff you can do, with your computer.
Yeah, we're very proud of the fact that credit unions can offer and do offer virtually every consumer financial service that the other providers offer to their customers. They can do that. Most of them offer home banking, offer to an extensive ATM network. In the case of our credit unions here in Michigan, most of them participate in a network called the Co-op ATM network, which means that credit union members have access to surcharge-free ATMs, 20,000 surcharge-free ATMs nationwide. That would be on the same par, if not greater, than the largest bank in the country in terms of their ATM network. But credit unions do that because they're small institutions and they have to figure out a way to cooperate. We have a shared branch structure that we were talking about earlier, where you can be a member of one credit union and be able to make a deposit or take out some cash or do a transaction at another credit union because they participate in a shared branch network.
Two opposite ends of the state that could occur.
Quite often, right.
Okay. Let's talk a little bit about the relationship between the members and the credit union. How is that different than just kind of being a member of a banking institution and participating in that organization?
That's a great question. I'll come at that in two ways. First of all, I know that from a practical standpoint, most people who are members of credit unions think of it as their bank. It's where they do their banking. But for the better educated credit union member that really understands the difference, they understand that there's a reason that credit union isn't charging the high fees that other providers are charging. There's a reason why the rates are a little bit better, and there's a reason why quite often the service levels are a little more personal. They understand that the reason for that is that the credit union is owned by the depositors. That's a fundamental difference. In the case of a bank, the owners are the stockholders, which include the CEO and the management and the board, but they're publicly traded or privately held. In the case of the credit union, it's the member depositors, one member, one vote, regardless of how much they have on deposit. And again, while most people don't really think hard about that, that structure is the ultimate reason why credit unions are in the marketplace providing extra value to their members. But there's also an effect on their non-members because it kind of forces the other providers to be a bit more consumer friendly in their pricing.
So there's a little bit of competition that exists.
Good competition, and you know, the nice thing is that even though credit unions are in that marketplace doing the things I just mentioned, the good news is that the banking industry for the past 6 or 7 years has enjoyed record high profits. The banking industry, the financial services industry, and then banks within that comprise the most profitable industry in our economy. And so the fact that you can have these tax-exempt, not-for-profit providers doing good things for consumers and not have it jeopardize the vibrant, profitable banking industry, I think is a very good thing.
So would you contend then there is a very positive relationship between credit unions and banking institutions?
Well, I wouldn't go that far.
Okay.
No, in fact, you know, the friction that exists between banks and credit unions, certainly what you're familiar with in legislative settings, comes by virtue of the fact that credit unions are tax exempt. By design, that allows them to price their services in a way that is a bit more consumer friendly than what banks would do. And I think many bankers resent that, and they look at it from the standpoint, well, credit unions are doing everything that the bank is doing, serving broad fields of membership. Why shouldn't they pay taxes? Well, and what we say is the tax-exempt status is what provides the incentive for credit unions to stay credit unions. You take away that tax exemption, many of those credit unions would just flip to a bank charter, and away would go. What would go away is all of those benefits that I mentioned, that are the pricing benefits and the service features that credit unions offer.
Well, let's just review some of those benefits that may be unique in a credit union setting versus a banking setting.
Sure.
You mentioned a couple. Are there additional ones?
Well, I think the main benefits are certainly pricing. Now,
when you talk about pricing, are you talking about lower rates, more items that a consumer can take out loans for?
Right. All of the things that I would tout as benefits are the very things that the banking industry has heartburn with. They don't like the fact that credit unions are setting their pricing at a bit more favorable level than what they can do. But what I'm talking about is on loan rates. On credit card rates, on average, credit unions interest rate on a credit card tends to be about 4 or 5 percentage points lower than what the typical bank-issued credit card would be. Certainly on auto loans, about 1% lower than what the average rate would be from banks, and on and on. On the savings side, the interest rates are a bit higher, but when you look at the averages, maybe not in a real compelling way. The advantages are slightly better on the savings side, I think much greater on the loan side. And then certainly in the area of fees tend to be lower and not as pervasive as what you would find at a bank. The bottom line is when an individual household tallies up the savings, they're probably not talking about thousands of dollars of difference, but they're probably talking about hundreds, $500 a year maybe, something like that. But again, for the average middle-class household, saving $500 on lower fees and a little bit better rates on loans and so on does add up to a really big benefit.
Now, have you seen the rate of users increase over a decade or more? You mentioned that credit unions first began right after the Great Depression.
Right.
What has kind of been the rate of usage from citizens?
Well, again, you can measure that different ways. If you look at market share penetration, our market share among the banking institutions, just in the depository institution sector, nationwide has probably grown from 0 to just under 7% nationwide. But that's just since the 30s. And so certainly that market share has been increasing, but not at a dramatic rate. If you look at the growth in membership, we've gone from 0 credit union members in the Depression era to what we have now in the range of about 80 to 85 million consumers belonging to credit unions. I mentioned in Michigan it's about 42% of the population. So yeah, going from 0 to 42% in roughly a 75-year period is pretty good.
Okay. I also want to touch on what your organization does for all the credit unions in this state, and then how you work with legislators. I mean, you're here kind of talking about what is positive and negative about a credit union, but explain a little bit about the league and what the league does to promote credit unions, how you interact with legislators.
Sure. Well, again, like most associations, we could probably divide our activities into 4 areas: lobbying, education programs, information services, and public affairs programs that